Lots of good vital signs in Columbus, Ohio. Steady economic progress, healthy occupancy rates, and strong rent growth. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your Columbus update. Columbus, Ohio has emerged as one of the Midwest's top apartment markets. Really didn't take much of a hit during the downturn, and it was quick to move into recovery, and now it's into growth mode. The headline has been on the pricing side. Columbus ranked 10th nationally among large markets for year-over-year rent growth, rents up 5.1% annually. And when you look at that top 10 that we're showing you on the screen, you'd expect a lot of the ones that are on there to be there. The Bay Area trio takes up 3 of the top 4 spots, Boston up there at number 5. Then some other metros you'd expect, Austin, New York, and Denver. But a few markets you might be surprised to see up that high in the list. Columbus is one of them, along with Charlotte and maybe Raleigh-Durham as well. All 3 of those not traditionally big rent growth markets, but they've really come on strong in the past year. And for Columbus, it's right on par with some of the best rent growth they've seen in the past 12 years, and it's the biggest in 6 years. Rent growth levels have been a bit volatile here in recent years, as you can see from this chart here. But if you own or operate in Columbus, you've got to like that trend line moving consistently upward over the past 2 years. And let's look at some submarkets showing some big rent growth, and it's really the metro's higher end, most expensive, most desirable submarkets posting the big hikes. Rents up 10.9% year over year in the upper Arlington, Northwest Columbus area, up 8.1% in the downtown University District submarket, and up 7% in Dublin-Hilliard. And let's take a quick look at occupancy rates. Again, not much of a hit during the downturn, fell as low as 93%, not that bad, and it's been right around 95% for most of the past 2 years. A little bit of easing in the past few quarters, but occupancy is still quite healthy at 94.8% as of Q2 2012. And 5 of Columbus's 9 submarkets have occupancy rates topping 96%, including the 3 with a big rent growth. Downtown University District on top, very tight at 98.5%. Dublin-Hilliard in second, just shy of the 98% mark. And one reason that Columbus has done so well, particularly on the rent side, has been the local economy. Take a look at this chart showing annual job change by quarter in Columbus. Year-over-year employment growth of around 15,000 jobs for much of the past 2 years. Now, that's not a huge number, but as you can see from this chart, it's the biggest growth Columbus has seen in a decade. Now let's take a look at net job change since Q1 2008 in the major Midwest markets. And this is going to show you that Columbus has been the strongest economy in the Midwest in recent years. This is taking into account the job losses in 2008, of course, the worst period in the recession. And what you can see is that Columbus leads the pack with 5,900 jobs added on net. The only other metro in positive territory on that list is Indianapolis. All the others are still in the red. Columbus is, of course, home to the state capital of Ohio, as well as Ohio State University, 2 of the big engines of the local economy. And they really helped the economy stay pretty steady during the downturn, not get hit as hard as some other places. But in the past few years, the growth has really been driven by the private sector, and we've actually seen some cutbacks in the government. Now, going forward, we should continue to see pretty steady progress in the Columbus economy. That should allow occupancy rates to tighten up a bit more. Rents probably won't see the big increases we saw in this past year, but rents should continue to increase just more moderately. All in all, Columbus should certainly rank among the Midwest's healthiest markets going forward. And that wraps up for Columbus. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.